Professional traders do not think the way most beginners expect. They don't wake up asking what the market will do today. They don't search for certainty. And they don't measure success trade by trade. They think in systems, not outcomes. The biggest difference between professional and amateur traders is not intelligence, tools, or access to information. It is how decisions are framed. Welcome to the Phantom Trader world, where clarity comes before execution. Beginners think in terms of predictions. Professionals think in terms of probability. A beginner asks, will this trade work? A professional asks, is this trade worth taking even if it fails? That single shift changes everything. Professional traders assume they will be wrong regularly. They do not fight this reality. They design around it. Instead of trying to avoid losses, they focus on controlling them. Losses are expected. They are budgeted. They are part of the operating cost. This is why professionals rarely react emotionally to losing trades. The loss was already accepted before the trade existed. Another major difference is time perspective. Beginners think in days or weeks. Professionals think in sequences. They judge performance over dozens or hundreds of trades, not individual results. One bad trade means nothing. One good trade means nothing. Only behavior over time matters. This long-term framing removes pressure, and pressure is what destroys discipline. Professional traders also separate identity from outcome. They do not feel smart when they win. They do not feel stupid when they lose. The result of a trade is information, not validation. This emotional neutrality is not talent. It is trained detachment. Professionals also understand the difference between being active and being effective. They do not trade to feel productive. They trade when conditions align. Most of the time, professional traders are waiting, observing, filtering. They know that forcing trades reduces edge. Another defining trait is preparation. Professional traders make their hardest decisions before the market opens. They define risk. They define invalidation. They define when they will stop trading. During live markets, execution becomes mechanical. This is intentional. Decision-making under pressure is unreliable. So professionals remove as many decisions as possible from the heat of the moment. They also respect risk more than reward. Amateurs are attracted to how much they can make. Professionals are focused on how much they can lose and still stay in the game. Risk is not tolerate. It is something they control. This is why position sizing matters more than entry quality. A mediocre entry with proper risk is safer than a perfect entry with no control. Professional traders also adapt their exposure, not their identity. They don't say, this market is wrong. They say, my size is too large for these conditions. When volatility increases, they reduce risk. When clarity improves, they scale carefully. They don't need to trade every environment. They also accept boredom as part of the job. Professional trading is repetitive, structured, often uneventful. If someone needs excitement, trading will eventually punish that need. Another overlooked difference is review. Professionals do not just review results. They review process. They ask, did I follow my rules? Did I respect risk? Did I execute as planned? Profit is a byproduct, not the metric. This is why professionals can remain confident even during drawdowns. Their confidence comes from consistency of behavior, not short-term results. Finally, professional traders understand that trading is not about being right. It is about not self-destructing. Markets will always be uncertain. Losses will always exist. What changes is how you respond. Professional traders think defensively first. Offense comes later. They survive. They stay consistent. And over time, probability does the rest. This mindset is not exclusive. It is learned, and it starts the moment you stop trying to beat the market and start trying to manage yourself. Let's break down what thinking like a professional actually means in ways you can practice. First, professionals think in expectancy. They don't need to win often. They need their average win to exceed their average loss within a repeatable system. So instead of asking, was I right? They ask, did I execute an edge with controlled risk? That is why professionals can take a loss calmly. A single trade is not the business. The business is the long series. Second, professionals think in risk of ruin. They understand a simple truth. You can have a good strategy and still fail if you risk too much. So they design their trading to avoid catastrophic damage. They limit risk per trade. They limit risk per day. They limit risk per week. They protect capital like a business protects inventory, because once the inventory is gone, the business cannot operate. Third, professionals think in rules that reduce decisions. Amateurs carry decisions inside the trade. Professionals carry decisions before the trade. This is why their execution looks calm. They are not deciding live. They are following a plan. Now, let's compare a typical amateur morning to a typical professional morning. Amateur mindset opens the chart and searches for a trade, feels urgency to do something, changes indicators or time frames to find confirmation, enters because it looks like a good opportunity, then improvises management when pressure appears. Professional mindset opens the chart and assesses conditions. If conditions are unclear, they do nothing. If conditions align, they execute only their best setup. They already know the invalidation level. They already know the maximum loss they will accept. They stop when rules say stop, not when feelings say stop. Notice the main difference. The professional is not hunting trades. They are filtering. Filtering is a skill. Now let's talk about the professional's internal dashboard. It's not only price, it's also self-control metrics. Professionals track process KPIs like rule following rate, how many trades followed the plan over trading frequency, how often they took low-quality setups, average risk taken per trade, is it drifting upward, drawdown management. Did they reduce size when needed? Session discipline. Did they stop after daily limits? These metrics are boring, but they're what actually predict long-term profitability. Now, an important point. Professional thinking does not mean being emotionless. Professionals still feel fear. They still feel temptation. The difference is that they do not obey those feelings. They have strong enough to hold behavior steady while emotions move. This is why professionals treat trading as training. They repeat the same actions. They repeat the same rules. They build a mental muscle of execution. Over time, the muscle becomes automatic. That is what people call confidence. But confidence is not motivation. Confidence is repetition. Now let's talk about patience. Professional traders are patient because they understand opportunity is unlimited. The market will be open tomorrow. The next setup will come. So they don't chase. They don't force. They don't need constant action. Amateurs often trade like opportunity is scarce. They fear missing out. They fear being left behind. That fear creates bad trades. Professionals are not immune to FOMO. They're structured against it. Now, the most practical shift you can make is this. Start thinking like a risk manager first and a trader second. Before asking where can I enter, ask where am I wrong? How much am I willing to lose? Is this environment worth trading? When you do that, trading becomes calmer immediately because you move from hope to planning. Finally, professional traders respect boredom. If trading feels exciting, something is usually wrong, size is too big, risk is undefined, or decisions are being made under pressure. The job is supposed to feel controlled, uneventful, measured, and when it feels like that, you are closer to professional thinking than most people realize. Here are 2 simple exercises that build professional thinking. Exercise 1, pre-commitment. Before you trade, write 1 sentence. If price reaches to this level, I am wrong and I exit. Then promise yourself you will not renegotiate it. This trains identity separation. Exercise 2, process scoring. After every trade, give yourself a score out of 10 based on followed entry rules, stop was logical and respected, risk was fixed, no emotional changes mid-trade, profit is not included in the score, only behavior. And here is a professional checklist you can use daily. 1. What condition is the market in? 2. What setup am I waiting for? 3. What is my maximum loss today? 4. If I lose twice in a row, do I reduce size or stop? 5. What would make me skip trading completely? If you can answer these clearly, you are thinking like a professional. If you cannot, the best trade is often no trade. Professional thinking is not a personality, it is a protocol. You don't become a professional by believing more. You become one by behaving consistently when uncertainty tries to pull you into reaction. And that is the real definition of professionalism. Not predicting better, but managing yourself better, because the market will always be uncertain. But your process does not have to be. That is how professionals survive long enough to win. If this video added clarity to how you see trading, support this work. An interaction tells the algorithm this foundation matters. A subscription tells me to keep building it with you.